This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Financials, which are getting a little bit of a bounce. And they look a little bit more bid, by the way, today. Look at that. XLF is finally back up to the April highs and specifically the 200-day. It just needs to get and stay above the 200-day to take off. Yeah, XLF does look bullish, Archna. Look at that little scoop pattern. It could be a situation where they're rotating into value, quote unquote, and that rotation is headed for XLF, but it has to get and stay above 52.64 XLF, which also happens to be around the 200-day. You know, that could be another reason why XLF is moving a little bit higher, Archna, as well. Translation, Warsh could be coming in to ease regulation for the banks. Big picture, that's bullish. Yep. We get rotation into the banks, more lending, all that. Regulation. Let me think about this. If you've got Warsh coming in next week, if he says bank regulation, the market is going to explode with bullishness. If he says deregulate the banks, market will get very, very bullish very, very quickly. Yeah, that could be contributing to housing. We get CPI, which is unfortunately bearish, but I'm already looking ahead at Bank of Japan not hiking in June, not until July. And I'm already thinking ahead to next Wednesday when Warsh comes and takes the podium, because we know there's not going to be a hike or a cut from FOMC. They're going to be focused on inflation. We already know we have negative real rates, which look to be going more negative. Anyway, that little scoopy pattern here in XLF looks like it might be a little bit more than rotation. Last time we went back into negative real rates, literally, the Fed started expansion because we had the repo rate, the repo drama. They had to relieve basically strains in the money market. We do not have any strains in the money market right now of size. We've had the Fed absorbing about $40 billion a month under Powell since December 1st to reduce volatility in the money markets. I wrote about that, right? So we had the 2019 repo madness, and then I did a big research piece on repo last year. So I'm tracking it. We already know that last time they had this negative real rate, they had liquidity issues, but this is not what Warsh wants to do. He doesn't want to throw more liquidity at it because that's just going to make it more inflationary. That wouldn't be surprising, then would it? If he does come out and coordinates with Bessent to deregulate even more the bank requirements, that would be very bullish. Banks, market, and housing. I'm thinking out loud here. He's not going to do the same thing they did in 2019 because liquidity is inflationary. Inflationary drives yields higher. He wants nothing to do with that. We got negative real rates. He's not going to do balance sheet expansion like they did in 2019 and like Powell has done throughout. I think they're going to go for bank deregulation. Push. Right before the midterms. When? Miran has talked about this too, hasn't he? All right, anyway, I'm focused on this scoop pattern going, all right, banks look strong. It's not just rotation potentially. Next Wednesday, I think, could be very bullish. If Warsh comes out and talks about the trillions that are in reserves held by banks because of liquidity rules, and he needs a path to get rates to stop rising, number one, because cutting obviously makes no sense in an energy globally when central banks are hiking and inflation is rising. Both of those things are global issues, not just US. I don't see how he's going to get a smaller Fed. I don't know how he's going to get control of rising yields without getting banks some deregulation. That's it. If you hear anything about bank deregulation or easing regulations or anything that has to do with the word regulation and banks in one sentence, let me know. Because that would help the balance sheet come down for the Fed and also could impact lower rates. We'll see. Tim says, Warsh, he will definitely come up in support of reducing banking regulations as they have for everything, including the SEC, weakening the foundation, in my honest opinion. All right, well, that's why I was trying to focus on what's going to happen next week, because I don't believe pricing and rate hikes is going to last with him coming in. He's going to do something that's going to be different than Powell. I'm trying to parse it out. He can't cut with rising inflation. He doesn't have consensus. He doesn't want to add liquidity, and we don't have a crisis. But easing regulation, it has to be the plan. And even if he talks about it, the market's going to react positively. But that's next week. We still have to get through this week.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.